Good morning, everyone. Welcome. My name is Linda Griffian. I'm the Education Programs Coordinator with Business Link, and I want to thank you for joining our webinar today. We always begin our webinars and meetings with a land acknowledgement. At Business Link, we are honored to provide services to all entrepreneurs and specialty services to our immigrant and Indigenous entrepreneurs. We are inclusive in our cultural understanding and awareness of the histories of our country. With that, we want to acknowledge that in the province of Alberta, we are situated on the traditional territories of Treaties 4, 6, 7, 8, and 10, ancestral homeland of diverse First Nations group, Métis, and Indigenous people whose ancestors have walked this land since time immemorial and whose histories, languages, and cultures continue to influence our vibrant community. We pay respects to the Indigenous people of this land, past, present, and future, while recognizing their cultural heritage, beliefs, and relationship to the land on which we reside. Thank you for joining, and I'm pleased to introduce Jos Herman, who will be presenting today. And Jos is the president of Resources and Solutions Professional Corporation, focusing on business planning. She is a business advisor that brings over 20 years of experience in wealth preservation, business planning, tax, estate, and succession planning. In her role, she provides professionals, including accountants and owner managers, in various aspects of their business, such as development of financial and estate plans, estate planning, taxation, tax efficient investment strategies, asset protection, and philanthropy. She is a sought out speaker that talks business, and she knows business owners and entrepreneurs. We're very excited at Business Link to be presenting this 8-part series from CPA Canada. So all of our speakers are CPAs. At the end of this session, you will be sent an email with handouts along with a PDF version of the PowerPoint presentation from this session today. We are also recording this session, so it's going to be available on our website within the next 3 to 5 business days as well. And at the end, I'm also going to be sending out a survey in the chat box and via email asking for your feedback on the session today, because we're always looking to improve what we do here at Business Link as well. A couple of housekeeping items before we begin. If you look down at the bottom of your screen, you will see that you have a chat box and a Q&A box. Jos will be answering questions throughout, and the way to have your questions answered is to place them in the Q&A box below. If you'd like to say hello via chat, you are welcome to do that and introduce yourself. However, if you have questions, please pop those into Q&A, as I will be asking them on your behalf throughout the presentation. So without further ado, please welcome with me Jos for 5 common mistakes that startups make.
Awesome. Thanks, Linda, and thanks for the great introduction. I put my information on here, and as Linda sort of indicated, we have the opportunity to share as entrepreneurs. If you have questions even after the fact and you wanted to follow up, there's my contact information. I'm based in Alberta, and again, it's great for you to join us today. It is your opportunity to learn, to ask questions. We'll try and answer the questions, as Linda said, during the time, but we'll have some time at the end. So, you know, the topic today says 5 top mistakes, and I go, you know, I think that there's an opportunity to sort of say it a little bit differently, I think. So I wanted to sort of put it as this topic. How about this? 10 tips. And so when I think of tips and considerations when you're starting your business, etc., it's more about what you should know and that no one told you, right? You know, that's our challenge as entrepreneurs. We sit there and say, oh, geez, I wish I knew that in the, you know, those early years of starting out. So I think this is a more positive topic in terms of what I've created. And when I think of our topics, we're going to run through a myriad of ones. You may be just really, this is, the few weeks that you're starting. This may be the first year, wherever you are. I'm trying to hit somewhere along the road that we can try and help you out with. And so, as Linda said, I'm a CPA, so again, an accountant, but I do consulting. I don't do tax returns. I don't do any of the typical types of things that you think an accountant does. But I really know how to advise businesses along the way with different areas. So we'll talk about these different ones. What does corporate structure look like or business structure look like? When you get into like what's happening with do you create a lease with somebody? We'll talk about financial statements because again, it's one of those things that some people start off doing it themselves and then they realize, oh, I should get some expertise. Budgeting, compensation, how do you pay yourself? And good old taxes. I put that one in all caps. It's one of those ones people want to know more about, and we don't learn in school or any of the business courses. And then we'll sort of round out the other side of it in terms of how my world works of tax planning. We want to make sure that you're thinking about not only building your business operationally, but what do you look like going forward with your wealth, your family, etc. So that's our agenda. Let's start here. I'm really excited when I talk about with entrepreneurs because there's lots in Canada. When we think about, we don't think about the big, the Telluses and the other major kind of companies that we have in Canada. We think of most of the majority of our businesses in Canada are the small business owners, the entrepreneur. That is truly what drives Canadian business, and again across North America as well. So again, when you think about celebrating you, etc., there's lots that you can learn and you will learn along the way and make mistakes. That's part of it, but you'll have many successes. So that's exciting. The other part of it is when you think about you running your business, it may be just you starting off, right? It may be you with no employees, and there is a lot of businesses like that. And so when we think about this idea of, how many, we're talking a little over 1 million, and statistically, that's what it's sort of sitting at right now. So again, that's where you may start, but we'll talk a little bit about staffing and people and things like that, because that's important. When I think about your business cycle or any business owner's cycle, it really comes down to, you're going to go through this typical world of, okay, I'm going through this launch, I'm going through this startup, however long that takes. And then you're going to develop some growth, right? You're going to be humming along and then get the maturity side of things. Depending on what industry you're in, depending on who depending on, different, economic things that are happening, your life cycle, your business cycle will develop differently than your neighbor beside you. That's really what it comes down to. And how you exit, that's, again, something to think about. Is it something where you want to do this for as long as you can? Is this something where you could, sell the business? A lot of this exit side of it is something that, again, is looked different for a lot of people. And again, I never use the word retirement. I think I've come across too many business owners and entrepreneurs that they may be serial entrepreneurs and they're on to the next vision, etc. So it's exciting that way. Here's where we'll kind of start with. This is our big focus when we think about your business structure. What does it look like? What can it look like? It may develop along the way. Like I said, it could look differently if you're a one-person operation versus you have employees, etc. At the end of the day. So when you think about business structure, the language that's used is you're either a sole proprietor or self-employed, or you have a partnership with somebody. So let's say Linda and I are partners, or you have your own corporation. So it may be you are the shareholder of your corporation, and maybe you have other people, or just by yourself. So we'll talk about these different structures because they're important in terms of how tax works, in terms of how you operate, etc. Being a sole proprietor, like I said, it comes down to that, that language of you're basically self-employed, right? Whatever revenue you bring in, whatever commissions you bring, whatever that language is, that revenue minus whatever expenses you have is your net income. So when your accountant that maybe you work with or your banker or whatever, they're going to say, well, how much net income do you have? And that's really the number we're trying to come with. Revenue minus expenses. So when you're completing your tax return, which is tax time right now, you're going to complete it on your personal tax return, right? Your T1. And there's a different section for that in terms of business income. And then when we think about how you operate from a tax perspective, it can't be more than 12 months, right? And you normally would have a year end of December 31. That's what you look like as an entrepreneur, sole proprietor when you operate in this fashion. Now, the question is, when you operate as a sole proprietor, now you can operate as a business name either as yourself, so Jos Herman, or you may register as a separate business name. So again, we're not talking about you being incorporated yet. We're saying, hey, if you want to operate as, Jos Herman, setting up business websites, etc., and that's how you would bill, you can do that. There's nothing wrong with that. You can also operate as, John Smith, and I gave another example here, doing business as fantastic websites. So one's not right or wrong. It's just when you're, doing your tax return, you would need to indicate that's how you're operating as. And so again, do your clients know this? Do your customers know this at the end of the day? So that's how, again, as the sole proprietor works. How about the partnership? It really depends what industry you're in. If you're operating as a true partnership, people use that language loosely to say, oh, well, John is my partner or Lucienne is my partner. But there's actually business structures that are set up as partnerships. These were carry on as two or more different people where they've got either as individuals or you can have a partnership with two corporations. That's usually the language we use in the tax world, right? And even in the business world. So again, if you're saying to your accountant, well, I operate as a partnership, they will truly ask, are you operating that way? Or are you just using that language? I'm going to use my last two comments here about, if you operate with someone else, and I don't care if it's your brother, your cousin, or your neighbor, or someone you don't know, third party, you have to have agreements. You have to have it verbally, either verbally written down. I don't like anything verbally, but have it written down contractually. How are you operating? Do you have agreements in place that say, you're doing this, I'm responsible for this? What happens if we want to close down the operation? These things like that. So again, partnerships. This one with corporations, that's one where, again, where people kind of get mixed up a little bit in this world because it's a separate and legal entity aside from yourself. So I put on here just a picture. I love pictures because, again, they tell a little bit of the story. When you say you own a corporation, you are the shareholder of the corporation, and you normally own common shares. These are the ones that if you say, oh, my business is worth $1 million, it means that those shares that you own are worth $1 million, those common shares, the ones that grow in value. So when you think about these separate and legal entities, corporations, this is where you see the language of, well, Jos Herman Limited or Jos Herman Incorporated. You need to have the little part at the end when you're incorporating. Now, there's nothing stopping you from having like a numbered company. So you could have 123 Alberta Limited. Nothing stopping you there. But if you really want to be, like I said, resources and solutions, you can have that as your corporation name. So when you think about corporations, you can incorporate federally or provincially. Okay. If you're going to do business across Canada, depending where you are, then you would then normally incorporate federally. Most times people just incorporate in the province, and you would do that. And you would do what's called a name search. So think about it. If I think of my corporation, it's Resources and Solutions. So, but no one else can have that name, right? So again, it distinguishes itself. So you need to do what's called a name search to say, oh, is there another business that operates as X? So if you're in the website business, if you're in whatever type of business, no one can else have that name. And even if you're close, they will, registries will sort of say, oh, you know what, that's almost too close. Like if you wrote Amazon with an S, then that's where the government say, no, you can't really have that. So again, something to think about when you're setting up a corporation.
So yeah, so
Yeah.
I just want to pause here because we're getting questions on this, and just
Sure.
also to be transparent here as well, because we do get a lot of questions from a lot of our clients on sort of these sort of technical issues with it. So a couple of things, just a little background on me is I own an Alberta corporate registry, and we do this work for law firms and accounting firms. So I work for Business Link, but I also do that. So a couple of clarifications that we can do, and I can probably help with as well in this live feed, is federal versus provincial incorporation, because we get a lot of that. And I can tell you that for more than 25 years at my office, 90% of the incorporations we do are provincial incorporations. We have something here in Alberta, along with the other provinces across Western Canada, called the Northwest Provincial Free Trade Agreement, which allows Alberta, British Columbia, Saskatchewan, and Manitoba to link their registries together so that if you are registered as an Alberta corporation, you can bypass the expensive fees to extra provincially register your company in the other jurisdictions to do business. So just want to clarify for everyone from a registration standpoint, maybe Joost, you can sort of move in here a little bit, but when you incorporate federally, that does not just give you the right to do business across Canada. That's a bit of a myth. You are considered a foreign corporation if you are a federal corporation and you're doing business in Alberta. So Alberta will say to you, we would like you to extra provincially register your company here to do business. So you actually do two registrations. What it does allow you to do is it gives you better name protection on your name if you're very finicky about your name, because it's a little tougher to get a federal company name, and it's considered a protected name across all the provinces in Canada. Whereas if you incorporated in Alberta and you had an Alberta name, someone in British Columbia might have a corporation with the identical name to you. And if you wanted to register there, you may have to take an assumed name as part of your registration. So a couple of things about federal incorporation is it's not super common to do a federal corporation. Typically, you're doing a provincial corporation. And if you do a federal corporation, you're going to then have to pay all those fees in all these Western provinces to extra provincially register here. So unless you are super set on a name that you think needs to be protected all across Canada in some way that's super special to you, it's not necessarily a better choice. So maybe that's some of the answers. If I offer online services Canada-wide, do I need to federally incorporate? No, you can be based in your home jurisdiction, wherever you are, and you can do business around the world. Usually the requirements in jurisdictions are that you have a physical presence, you have staff, you have offices, you have a physical presence in that location, and you need to acquire things like maybe real estate or leases, or you need to pay workers' comp, or you need payrolling and that sort of thing in that jurisdiction. So unless you're doing that sort of setup, or you're purchasing real estate or doing those things, you can pretty much run your company from your home jurisdiction. And I have an Alberta corporation, and I do business all across Canada and the US, and we only have an Alberta corporation. Hopefully we've answered a few of those questions. Joost, do you want to input here or?
Yeah, Linda, I hope you saw I was nodding my head. Yeah, there's a lot of people that don't know about that partnership that we have across Western Canada, right, Linda? Like,
Yeah.
it is almost like a hidden gem. um of like, yeah, just if you need to do that, it's a very simple process. And Linda, it sounds like you've done that before for many business owners. And again, there's nothing stopping you. And I'll say most business owners, you're right, it's probably 90% that are just registered in Alberta. And again, federally, it just depends on what type of business you're going to operate, what you're going to do, what the name is, etc. So great
Sure.
points, Linda.
And there are residency requirements for directors as well. So federally, you'll have to have some Canadian resident directors, whereas provincially in Alberta and Ontario, in those two jurisdictions, none of the directors anymore have to be resident Canadians. There's lots and lots of things to think about from a registration standpoint with your types of registration. But certainly if you're a virtual company, if you're online, if you're starting locally, I don't know that there's a real benefit to federal incorporation. And I think that ultimately, if you're looking at branding and name protection and those types of things, you might be better off thinking of your company name as separate from your brand and thinking about brand protection as more important. So trademarking and those types of things in the future. So sorry, I won't take over your spiel here. We do have a question. Do you need to be making a decent amount of income in order to incorporate? That's for you, Yosta.
Yeah. Yeah, I think we'll hit on it a little bit later, but I mean, that's the ultimate question that we always get. Should I be making 50,000? I'm going to summarize it this way. Let's say you make 50,000 and you have expenses of 50,000. Oh, well, does it make sense to do it? Or if you're going to make a certain amount and you're just going to pull out a bunch of different money via dividends or salary, and you need all that money, it doesn't make sense to incorporate. But if you need some creditor protection, different things like that, incorporation does help. So again, it's industry based, it's personally based, but I will say there's not a numbers based, to be honest. It's just know what type of how much income you need out of the company. So that's my summary for, do you incorporate or not, or what's the magic number? If I think about the requirements, you need what's called articles of incorporation. It's basically saying, hey, on this particular date, you incorporated. What are your bylaws? What do the shares look like? The shareholders registry. Again, a lot of this is paperwork that you need, and you would have a minute book that has this type of documents in it. Service Alberta will say, hey, you need to also file annually. It's not a tax return. Let's be clear on this. It's just saying, tell us who the shareholders are, tell us what the address is, and confirm that with us every year. So it's an annual filing that a lot of business owners miss because they go, oh, well, I don't need to do it. But again, it's these types of things you want to make sure that you're on top of or have professionals help you along the way. So corporations, boy, we could spend a whole, my goodness, I do workshops on this for whole half days on this, but we're going to try and at least hit some more highlights of corporations. If you are a shareholder, like I said, that owns shares of your corporation with other people, right? So let's say you do have your brother and then a friend or whoever it is, and you are now shareholders. The question is, should we be thinking about other things in terms of our planning or our structure? Please, please, please have a shareholders agreement. So you may have heard of this. It is really a legal document that, again, is drafted by a professional, a lawyer. You could draft this yourself, but I do not recommend any types of agreements that are just written by yourself. Please get legal advice on this. Why people need to have a shareholders agreement is like, what happens if things happen, right? What happens if one of you passes away? What if one of you becomes disabled? What if you wants to retire? What if you want to sell the business to somebody? What if someone comes along and says, oh, hey, you're gonna be bought out by, for $1 million, $10 million, whatever the number is. What happens if there's marital breakdown? And what happens if you just don't like each other anymore? You need the terms or the lay of the land to outline what happens in each of these events, right? You can't just leave it till the, things hit the fan, in these situations. So again, it's just documenting what happens. So if Linda and I are in business together and we are shareholders of a company, we need to know for both of our sakes what happens. I will put just a tag team onto this idea of shareholders agreements, contracts, leases, loans. These are essentially like if you're going to lease space, you need to know what's the terms of it. What happens if I don't pay the rent? What type of rent is it? If I go into a contract for some type of franchising, what does that mean? Other agreements. So again, I talked about shareholders agreements. You could have partnership agreements. So remember our different structure that way. Read it. If you're not sure, get legal advice. I'm going to keep saying this over and over again. It's okay to pay a lawyer. It's okay to get a lawyer to review documents. It's okay to get a lawyer to review different things. If you get employees, and let's say they're a main key employee, they may have an employment agreement with you. So again, these are really important. Loans. Again, what's the terms? What happens if you don't pay? What is the consequences? So in terms of loans and financing, we're in a day and age of how we obtain money or capital is different than it was, many years ago. Do you have the opportunity to go to the bank? Could you go with crowdfunding? Could it be with friends and family? Have it documented, like to have whatever arrangements you're going to go in with people, know what the lay of the land is. So again, financing, it can get away on you. Is there a interest rate bump up that, can you still afford that loan, etc. So again, this is one where can you get the loan and do you have the ability to pay it back? And again, the documentation associated with it. I will say that there's lots of grants. And I mean, we could have, a whole discussion about getting grants from various provincial organizations, federal, et cetera, to help small business owners as well.
What I've done also is I've put in the Government of Canada link to all the grant and financing programs into the chat box for everyone so that you can see that. So I'm going to post that here now. And what you really need to do when you're looking for those types of services is you need to self-identify. What kind of registration do I have? What kind of entrepreneur am I? Am I a woman? Am I youth? Am I disabled? Am I immigrant? Am I Indigenous? Because there are so many provincial and federal programs designed around who you are. There's also programs that and Business Link manages two of them on behalf of the government. One is called the Digital Economy Program, and one is called the Canada Digital Adoption Program. And some of these programs require you to spend the money before you get the tax breaks at the end. I've put the link in the chat box so that you can see how those programs work. And throughout, Yost, I'm just going to put some links to the other programming while you talk about this.
That's incredible. Thank you, Linda, because I didn't want to miss that point. I think, again, as a business owner, you made a great point. You have to self-identify. Again, some of them are very specific. So thanks for that. Look for that in the chat. And I saw a couple of them there. Thanks. Let's jump to understanding financial statements. Oh, we have to do it. I sit there with my CPA hat on, and I think this is a lot with business owners that they don't understand how their numbers work. And we're not saying, oh, this, you have to know every single piece of it. Become knowledgeable, ask questions, right? There is a whole host of different professionals out there that can help you with your financial statements to sort of say, what do I need to know? So let's start with the balance sheet. The balance sheet is, I'll say, a snapshot at a given point in time. So what is the bank balance, the cash balance at December 31? What's your accounts receivable? So what do you have money coming in the door that people owe you at a given point in time? Fixed assets. Okay, so again, if you have the office, if you've got computers, if maybe you've got a building already, like whatever, type of entrepreneur you are, that's where we sit in the fixed assets, the plant, property, and equipment. Depreciation, that's is an accounting term to say I'm going to basically account for the use of the asset. So I can't just put the full amount on there. So that's the asset side. This is what I own, or this is what is coming to me. How about the liability side? Okay, well, I have accounts payable. So I'm going to pay, the person, my IT person, or, something. That is what I owe at a future point in time, and I still need to pay it. Maybe you have a bank loan. That's another line item. The way that the balance sheet is broken up is either short-term or long-term. So you'll see there that I've got current liability. These are ones that are due within the year, and the other stuff is owing after the fact. So a bank loan is certainly probably not going to be paid up in a year. There's probably going to be a 5-year loan. So the remaining portion will turn up in the long-term liabilities. The tricky part here in the owner's equity, you kind of go, oh, what is that, Yoss? So I've got capital stock or retained earnings. Capital stock basically means what is the cost base of your shares that you own. And your retained earnings are basically an accumulation of your net income, and we'll get to that, and your any dividends that you would have paid. And we'll talk about that as well. So when people say, oh, I've got $1 million in retained earnings, well, it's not cash. It's not cash. So when people start to say, oh, well, your business is worth X, well, it's an accumulation of what's happened. How much net income was there and how much dividends were paid out the door. Why do I have 2 red circles there? The balance sheet. My assets must balance between my liabilities and my owner's equity. So my 100 and my 100,000. So again, the balance sheet, it has terminology in there that we're not used to. We, in our lives, we don't really talk about what's our accounts receivable, etc. But again, it's one where if you're using a professional, ask the questions. Why is this number a certain way? What does that mean? It's okay to do that.
We have a question.
Yeah.
How does capital stock work for a sole proprietor?
Yeah, so if you think about it, this is truly just talking about the corporation. So again, capital stock only relates to financial statements for a corporation. So there you go, Linda.
Awesome. Another one is any software, and I'll put some links for software in the chat box for everyone. And we have a guide on the Business Link website. We have a series of financial guides, and one of them is about questions you should be asking your accountants, and some software as well. So I'll put that in the chat box. But do you have any recommendations for free minimum cost software? I can think of things like FreshBooks and Simply Accounting and QuickBooks.
Oh, yeah. Yeah, Xero is another one. So Xero is another one. There is a whole host of cloud-based accounting, right, Linda? That will make life easy and accessible, and it's making potentially accountants' life easier as well, to sort of say, hey, you just upload your receipts, etc., or your information, or if you do have a bookkeeper, then it makes the entries very easy for you. So lots of great options there, Linda, for software.
Perfect. And I'm going to put some links in, having once been at the BDC. So when I used to advise, when I was with the BDC, they have some great tools and resources as well that'll help you with answers to software and bookkeeping and things like that. So I'll put that in the chat as we move along as well. Thank you.
Oh, thanks, Linda. So balance sheet, yeah. And how about the revenue and gross profit? This is the one where we understand this one a little bit more. We understand how much sales we come in and from our customers or our clients. This will be excluding the sales tax or GST. So I have a really quick example there of, the revenue. Let's say I make $100,000, and my gross profit is again, what is the cost of sales, basically the materials and wages that directly produce that product, let's say, to get to my gross profit. So it's just terminology that we just have to be used to or get comfortable with. The accountant, may again say, well, what's your gross profit? And you're like, okay, I remember what y'all said. It's just getting used to the language. When people say, how much money do you make, or etc., we need to use the terminology of revenue or sales so that everyone is on the same page that way. How about the net income? So let's go through my mock type of example here, where you say, well, I made revenue of so much and my cost of goods sold, again, so my direct impact. So if I made widgets or, tables or chairs, what is the cost of making that table or chair? And then I've got my expenses. So everything from sort of, the operating side, my administration side, selling and marketing, there's my depreciation again, to get to my operating profit. And if I had some interest, because again, maybe I had some money in the bank, that would be along there as well. To get to my net income. My net income really means what is my sales minus my expenses to get to my net income. So again, if you're thinking about or the accountant saying, well, what is that? What's your number? You'll at least have some guidance to say what it could potentially look like. So net income. So understanding financial statements really comes down to, I've got my balance sheet with my cash, my accounts receivable, my income statement, or my gross profit really comes down to what's my revenue minus expenses to get to my net income. The other side of it, if I think about this idea of financial statements and the kind of the number side, is just budgeting. Like what is sales going to look like next month? What is sales going to look like next year? You need to kind of put that out, write it out. What do you think it's going to be? Do you have a budget? When people say, I should only spend so much on marketing, and will it get me so much? Put a number down. Because again, if you surpass it and you go, oh, geez, I thought we'd only spend $1,000 on marketing and you ended up spending $10,000. Wow, what happened? This is where people don't take that extra step. They just kind of, they're so busy running their operational side. So budgeting really comes down to, okay, you basically have 3 columns, right? How much will sales be? We're going to budget 40,000. But our actual was 45,000. Maybe it cost us less. What's our cost of goods sold? And what is our different operating expenses? So we just need to go look at it monthly. And again, if something was positive or negative in our forecast, why was it? Was it because of economic circumstances? Is it because we weren't efficient? What is the reason? And identify it. So again, who creates the budget? You? Yes, start there. Maybe you do have someone that does have that financial expertise, have them help you. Your general bookkeeper, the accountant, that's, person that probably would not be, if you're outsourcing that. But if you do have someone that you have in-house, they can potentially help you with that. So again,
we have a few questions that are sort of maybe related to this a little bit. So I'm going to answer Michael. Caitlin, maybe we'll get to, I'm not sure, but Michael, will I be allowed to have negative net income for a few years at startup? That's always a big question for folks. Negative income.
Yeah. I know it happens. And you can have that. Yeah, absolutely.
So you can also have 0 sales and 0 cost and file a 0 tax return. Is that correct?
Well, yeah, the goal is to make money, right? So we want to, most times you'll see that you'll make some sales, but you'll have maybe close to the same amount of expenses, and you can have 0 or negative. So it can be done. and
just to clarify for people, are corporations allowed to take a negative year and move it bump it forward into a positive year, and can sole proprietors do that as well, or no?
Yeah, you can still do that for
Okay.
both sides of it. So
Okay.
there's an expectation of profit, right? So again, and let's say it's CRA, because they are the people that come and say, hey, is that expense reasonable? We're going to talk about that, because that's something really important.
And one final before you go is, does a sole proprietor have owner's equity, or is that only related to having a corporation?
Yeah, it's only related to a corporation.
Thanks.
Yeah.
Great.
Yeah,
Thank
great
you.
questions, everybody. All right. So my last comment about, gross sales or whatever, how you're budgeting your sales process is, either do it monthly and, recognize that is there some months that may be slower than others, like maybe your summer months are slower. So recognize that, account for that to say, you know what, it's okay that our sales budgeting will be lower in those months. Okay. But again, I encourage you to do that. Recognize where your trends are, because again, maybe you're going to get a loan from somewhere and they want to know, did you create a budget? Did you create a plan? And were you sort of close to it? And even recognizing yourself, again, boy, we budgeted X and it wasn't that. Do we need to adjust it? All right, compensation. Well, I mean, the question is, you want to make money to pay yourself, to live, lifestyle, whatever it means, maybe create another business. How you pay yourself is really, it depends what your lifestyle is. I have some clients that are, they spend a lot. That's their lifestyle. Others that are, again, they're very prudent in how they spend. So the question really comes down to is, if you're incorporated, because that's sort of our theme a little bit here, because that's the tricky part, is I can pay myself salary or dividends. Okay. So if I'm a sole proprietor, I can still pay myself salary. That just to be clear. But the salary side, for if you're incorporated as a corporation, salary comes out as a deduction because you're seen as an employee, and it must be reasonable. So let's say that you're paying yourself X amount. You would have a line item there in your revenue minus expenses for your salary. Okay. Why I put reasonable? Because you could have your kids, your spouse, be paid out of your corporation. And if you're going to pay them, I'm going to give you a really quick example. Let's say the kids are sweeping the floors and doing whatever, and you're paying them $100,000. Would you really pay someone $100,000 that you didn't know to sweep your floors? So there's a reasonability test associated with salary. How about dividends? These are after tax. These are only paid to shareholders. So remember my little picture there where I had you on top, there's your corporation. These are paid after the fact, after tax. And remember I said it's out of the retained earnings. So one is not right or wrong to pay yourself. When you talk with an accountant, they'll say, well, one is more tax efficient than the other. They kind of do a calculation to say, well, it's more efficient or tax integrated wise to pay yourself dividends versus the other. Here's where I sit in my world. When I think about owners paying themselves salary, it gives them the opportunity to contribute to CPP, which may mean retirement income for them. It may mean that you can contribute to RRSPs or IPPs, which are individual pension plans, or it may give you the opportunity to participate in some government programs, right? So when we went through COVID, they did not care that you paid yourself dividends. They were more concerned about what T4 income or salary did you pay yourselves. And also about protecting you as the business owner. If you're trying to get disability insurance or key person insurance to protect your business or your employees, they really look at salary, in terms of that planning. So when I think of salary versus dividends, it's different. Even though I've got an accountant hat on, I don't think of it as what's more tax efficient than the other. It's what is going to give you the opportunity to have more planning opportunities associated with things like salary. Okay.
That leads us into a couple of good questions.
Yes, I thought it would.
Because, I think some of the mistakes people make is not understanding that their accountant is their forward managing advisor. So your accountant isn't just the person you go to with all of your boxes of goodies to, drop and say, please minimize my tax bill for me, which is what a lot of business owners will do.
Yeah.
Really, this is the person that you're utilizing. You're paying them, and they're working for you, and they have all the accreditation to do it, and they have all the professional development to do it, to sit down and do some strategy work with you. So many business owners don't utilize their accountant's well. Your accountant is the person you're doing strategy work with. So for example, it might be better for your in a year, if you're planning to make a big home purchase or something like that, it might be better to plan that a year or two in advance, because you may be better off taking salary as opposed to dividends to show for your mortgage brokers. And you need to talk to your accountant about your life a little bit so that you can draw effectively and efficiently out of your corporation. So that's definitely something to think about. We have a question from Devin that says, can you pay a bit of both? So salary and dividends?
Great question. Yes. Yeah, absolutely you can. So there's no right or wrong formula. Sometimes if you want, different credits, then you would pay yourself some salary, etc. Yeah. So I see, and I encourage both. What my biggest thing is, accountants only thinking, well, we paid dividends because maybe, for a certain reason. So yeah, but both is perfectly fine.
Okay. Does the government audit the corporation operations as well? How often do they do that, and what do they look for? Is that a whole different topic? Or?
I know, yeah. Yeah, I mean, you think about it, is CRA, right, the government, they're the ones that are saying, look to say, if you had an expense and it was a personal expense, that's a no-no, either as a sole proprietor or as a corporation. That's the biggest thing that they're looking for. How often are people audited? Again, it depends. It's they really are using artificial intelligence now, right? A lot of computer programs, etc., to sort of generate who's going to be audited this time. And sometimes they just have different, I'll say, trends that they're trying to do. There was one year that they were really looking at gift cards. They were like, if you paid out a gift card to your employees, they were auditing that. So that's really the three things that I'll say about CRA and audits and etc. Is there any more questions, Linda?
There's a couple. So Michael, you have one here that's really for your mortgage broker. So reach out to your mortgage broker. They do their own calculations on, and depending on whether you're getting a mortgage for a business building or whether you're getting a mortgage personally, they'll walk you through all the proofs you need to show. What they're really looking for personal mortgages is they're looking for your income versus your expenses and seeing if you qualify to pass the stress testing to do that. So reach out to your mortgage broker for that. And how does buying back future equity in your company work? Is that even a thing?
Oh, I don't quite know what they're maybe asking there, Linda, because I saw the question there on the chat. It's so if you're going to, let's say Linda and she owns 50% of the company and I own the other 50%, I could buy out her equity, right? That share value. So if her value is $1 million, I would need to come up with $1 million to do that, right? So I think that's maybe what they're asking, but if there's more to it, then we can maybe try and get that at the end.
Okay. Thanks.
Okay. Yeah. All righty. So I wanted to make sure that we hit that one in terms of that. So if I think about your corporation, you're going to get revenue in there, expenses, and the corporation's going to pay tax. And then if you want to pay money, either salary or dividends out of your corporation, then you have another layer of tax, personal tax. So again, managing that, having conversations with the accountant, be clear. And Linda, I'm going to make a further comment about, forward thinking of the accountant. they're going to ask you to sign an engagement letter, and they're going to say, hey, we're going to do your taxes and we're going to do your financial statements. But if you want to have these other discussions or these business planning things, then have a separate engagement for that, and to pay the accountant for that time to do that. So again, because some people go, oh, my accountant didn't help me with that. It's a question of, did you engage them to do that with you? Okay. So again, just my tip there for that side of it. All right, my big one with taxes. When you think about people not being aware of it or how much they pay, people are aware of how much personal tax they pay. It's tax season right now. The question then comes into play of the two different types of taxes, let's say, that we have as business owners. And I mean, again, there's more, there's payroll tax, etc. And I'm just looking at the time here. Income tax and GST, right? So those are our two major that we think about as a business owner. When you're setting up as a sole proprietor or even as a corporation, the government is going to say, hey, we want you to get a single account number to deal with the different taxes that are required in Canada. So it's kind of going to be like a 9-digit number, maybe it's 777 something. And if you have to pay GST or collect GST, there's a RT0001 number. And if you have to pay people payroll, so that's going to look differently, RP001. Corporately, it could be RC001. So it's the same business number. And then the little extensions, depending on what you're dealing with, from GST to payroll, or if you're incorporated. So again, the banker may ask you for this particular number, the accountant will. The accountant may help you with your payroll and filing your payroll taxes, etc. So again, depending on what you need to handle, either as a sole proprietor or as a corporation. So this is where those federal numbers come into play.
And just as an aside for everyone, if you are registering as a sole proprietor, partnership, or incorporation in Alberta, the online system now automatically generates that first 9-digit number for you. Doesn't matter if you're a sole proprietor, partner, or incorporation, you're going to get that 9-digit number when you register. You'll have to apply for the other secondary pieces of it to move forward from there. And I'll send you the CRA information in the chat. Thanks.
Oh, thanks, Linda. That's incredible. That's a great point. So when I think about personal taxes, or you're sitting there as a business owner and you've got your revenue minus expenses, that's, again, you think about due in terms of April 30th. There's also a June 15th date as well. So keep on top of that. You don't want CRA to, be knocking on, not I say knocking on your door, but I mean, when people say, oh, when do I get audited? Well, if you're filing your taxes late each year, does that sort of trigger something in their system? I don't know, but pay your taxes on time, file as quickly as you can, do those things to sort of don't attract. What I wanted to do for the sole proprietor people is sort of give you this little snapshot here. So when you're filing as a sole proprietor business, you're going to say, hey, this is how much revenue we have, and this is how much expenses we have. So I kind of wanted to give a listing here from the tax form when you're filing your personal tax return as a sole proprietor. These are the ones that if you have advertising, office expenses, salaries, rent, these are the things that you can deduct for tax purposes. So remember how I said, if you're trying to do something personal, that is, that's not allowable. And again, your accountant's going to ask you the same thing. Is this for personal use or, business use? So this is a really good guideline, because this is really what's going to be showing up on your tax return to complete. So again, what's deductible in our world? How about corporations paying tax? Remember how I said they pay their own tax aside from you being the shareholder, and it must be filed within 6 months of your year end. For corporate taxes, if you make less than $500,000 of net income, In Alberta, it's 11%, 11% tax. So that's why, if people say, well, should I incorporate or not? That's a really intriguing position, because that's a really low tax. We were the lowest in Canada. I should say. If I think about if you're earning income, because I think I saw someone's comment there about, well, what if I have a GIC in my company and that's going to earn interest income? That's not taxed at 11%. That's actually taxed at 50% approximately. In Alberta, it's about 48%. Some of the other provinces are well over 50%. So be cautious of that, of how you earn or invest income in your corporation. But for the most part, if you are making tables and chairs or whatever you're doing, it's about 11% here in Alberta. So I wanted to kind of give you the sense of what goes on from your financial statements that we talked about. So your revenue, your sales, minus your expenses will get you that net income. And so the accountant's going to take that number and carry it over to your T2 or corporate tax return to say how much tax is then owing for tax purposes. Okay. So again, that's how the two tie together. And so then a lot of people fail to file their corporate tax return. Like, I will say that's one of the biggest mistakes people do. They forget to file tax returns, and accountants are scrambling to get this done because, again, maybe they're taking you on as a new client, etc. How about GST?
Just wanted to mention too that your corporation can have its own fiscal year end. So you as a person, your fiscal year end is December 31st each year. That your year runs from January 1st to December 31st. Your corporation can choose its fiscal year end. And we often get questions about that too, Ayos, is what's a good fiscal year end? Is there any such thing, or is it really up to the corporation ownership?
Yeah, I know I see everything from December 31 to June 30th to September 30th. Those are what the common ones. There's no right or wrong, but it gives you potentially deferral. So if you're paying yourself salary, you would be recording that in the calendar year versus your corporation, which may file, let's say, June 30th. So sometimes it gives a deferral from that perspective. But again, no right or wrong. So great question, Linda. GST, let's jump to that one just to kind of make sure we've got time here. So this is, again, when you think about, you can have input tax credits. And so you would need to register for GST as soon as your sales reach 30,000. So again, it allows you to recover and claim back the GST on those expenses that you've paid. I'll jump to this one in terms of just finishing off the conversation about cash flow. Linda had already mentioned about there's different software. Is it QuickBooks or whatever for you to capture all of your financial information? Do it. If the accountant's going to do it for you, use separate bank accounts, use separate credit cards. Again, even if you're doing, things personally, have one that you're just using versus, for everything else in your lifestyle versus the one that's business. Keep all your receipts and just sort of monitor and keep good accounting records. You've got that cliche of, I'm bringing this stuff with my box to my accountant. Be cognizant of how you're keeping and recording information, especially receipts. The part we're here about, saving tax planning, this will evolve as you evolve. I will say, find capital or create wealth outside of your business for your family, for yourself. If things don't go well, or, things do go well, there's lots of combinations there when I say this. Again, it goes back to protecting yourself and your business at the end of the day. The part about protecting your business, I will just say, just in general, just as we sort of close out our conversation, is be sure you have the right insurance in place, right? Be it property insurance, be it E&O, so errors and omission, be it life insurance, critical illness, disability. There are different types of insurance to protect you, your business. Make sure you have it. I will say this is one of the tips and mistakes people do. They don't have it, they just dismiss it. But again, think about the advisors that can help you that way. The last closing comments about professional team really comes down to you can't do everything. As you grow, or even as you outsource, because someone may not be a staff member to you or an employee, but they may be someone that you contract out. There's a Stephen Covey book, Getting the Right People on the Bus. Surround yourself with good people, have the conversations when things don't go well with those people, and surround yourself with different networks. And I'm sure, Linda, in your world that there is different association and business events that are available to many entrepreneurs, many business owners across the province to build your network. Share your story. Other people can share their story with you, learn from them, etc. And maybe you'll develop more business, more thought, etc. as you grow. And finally, build your professional team. Lawyers, like I said, along the way, they'll be the ones that will draft and review the agreements that you need to have in place. The accountants will again be the distinction between bookkeepers and chartered professional accountants, CPAs. Bookkeepers, again, can put debits and credits together for you. CPAs can provide that guidance, that advice, etc., that is so important about building a business, etc. There's going to be different advisors along the way in terms of financial, insurance, business-wise, etc. And some of the specialists that you'll need along the way, be it IT, payroll, etc. If you build your network, then you can build this greater professional team, because again, you can't do it alone. Linda has a number of resources for you in the various links that she's provided. But again, we want you to thrive. And that means, again, building a team. So just in terms of a recap here, how you structure a business will depend. Budget and plan, stay on top of your numbers, protect your business. Income tax and tax, I will say, is one of the most misunderstood things. Your professional team is so important, and the tools and resources that Linda's going to share. And I've got some other ones along here too, because you'll get these slides so that you'll have it as a reference point. And again, a whole host from the BDC to CPA Canada, etc. So Linda, I think we captured everything that we wanted to, but is there any last couple of questions that we had?
We have a few. Without any sales, can I defer to get the insurance? I'm not sure what you mean by that, Michael. Do you mean, can you defer paying insurance fees or making insurance payments? Your insurance company is going to want you to pay your stuff right away. Maybe you could expand on that. Are photos the best way for keeping receipts safe?
Yeah, there's lots of software programs associated with that, right? Where they capture the receipt. So yeah, I'll say absolutely. Yeah. And it's okay if you are choosing to be paperless. Yeah, if that's your mode of running your operation, absolutely.
Do you have suggested insurance brokers and what prices to expect? That is going to be all over the map. I can tell you, as someone who needs to keep errors and emissions insurance, for 10 or 15 years, I had the same insurance broker, and every year they just automatically sent me the renewal until 2 years ago when my price tripled. And that's when I started shopping around. And you have to also consider it's beyond price. It's also about coverage, and it's about how they're going to react to you in a disaster, if that's the case. So do you have any suggestions on that, Yost?
Yeah, and it runs the gamut of life insurance and critical illness to the property insurance. It's the detail when you need the money because of loss, are you sure that it's captured, right, in that wording? Even though you got the cheapest price, and Linda has alluded to that. So again, if we go back to the insurance question, send me an email and maybe we can bring some clarity that in what type, etc. But it's not all about price.
That's for sure. Someone's asked if I can refer an E&O insurance company. I can say that I went through my broker with Intact, who linked me to, it's a special insurance, so you need to get it through a special, the commercial end of the insurance, whoever you're using there, and you can shop around for that. Corporate tax. If your corporation earns investment income from a large retained earning, would business expenses come off this? For example, can I use expenses to reduce business investment taxes?
Yep. So that was remember my commentary about, is it 50% tax or 11% tax? So you'll still have expenses, but it's just the type of income that it's generated from. Yeah.
Awesome.
Yeah.
Okay. So let's see. So we covered a lot of different aspects of things you need to think about when you're starting your business. Some stuff you're going to bootstrap, other stuff you're going to defer as expenses. You're going to have a lot of things to think about. I cannot say enough the value of, no matter how strapped you are at the beginning. And when I started my first company in 1993, ooh, I'm getting old. I was really, really poor and really, really strapped, and I bootstrapped everything, and I could hardly afford anything. But the best investment I made, quite frankly, was having, like, I lucked into a good accountant at the time. It was by no design of my own that I lucked into a fabulous accountant who took me under his wing, answered all my, what I thought were silly questions, helped me understand what the heck it was I was doing and why. He was quite patient with me, all things considered. And I can't say enough about having that advisor in your pocket. And it's a critical part of your business, because your competitors have that advisor in their pocket. If you're not doing it, your competitors are, and there's a reason they're doing so well, is because they've got that they've got that advisor in their pocket, and you should too. It's really a critical first piece to your business, because they're going to answer, like, you had so many questions today. Everyone had so many questions today. That's the person who's answering those questions. They're up to date. They take their development every year. They know what's going on with CRA at any given point in time, and what all the changes are year after year after year that go on with that. I've left links in the chat for everyone. I'm going to just hang on for 2 or 3 more minutes here and let everyone grab the links out of chat. I'm also putting in chat a survey link to a survey we'd love for you to complete. It takes probably 45 seconds, but it helps us evaluate and understand the education we're delivering, and that's important for Business Link. And it's also important for Jos and our other speakers as well, to get the feedback so that we can do continuous improvement, and we can also be, updating and changing or delivering the same fabulous stuff to you over and over again if you like it. So please complete the survey. It helps us. HG, you have a question? If you have a question, can you please type it in the Q&A box? Because Henrik G, I don't know what your question is, but if you go to the Q&A box where all the questions are, you can type it in there. Let's see if I've got it in there. I don't see your question, Henrik, in the Q&A. Can you switch from chat to Q&A? The van. Henrik is asking about having a personal vehicle in a business. Any thoughts on that?
Yeah, so basically, the accountant's going to work with you to say what's personal use, etc. There's a charge essentially with it. So yeah, it's you can have it. It's just as long as how it's accounted for at the end of the day. Yeah.
Great. And Sarah, what are a few of the changes and tasks that need to occur when changing from sole operating owner to having employees?
Oh, yeah, I'm just looking at the sort of the question here in chat. Yeah, it's really, yeah. When when you have the employee side of it, it's just making sure that everything is captured in terms of payroll. Again, it's a matter of WCB exactly. It doesn't change, them getting their T4, right? That's not going to change. It's just a matter of, is it, do you pay them a different way potentially, or do they have employment agreements, those things like that. So that I will say just in the general closing comments with everybody, Linda.
Wonderful. Thank you, everybody, for attending and staying on a few extra minutes with us. Thank you, Yos, as well, for all of the great information. Within the next 24 hours, you'll be receiving emails with a copy of this slideshow as a PDF format, the bio from Yos, the survey link from me, in case you didn't do it already via the chat. And we have more upcoming sessions. So please subscribe to the Business Link newsletter, because that's where you're going to hear about all the next sessions delivered by CPA Canada. If you liked this one, we have a few upcoming sessions that are more for business owners who've been in business at least a year or longer. So make sure you read in the fine print on Eventbrite if this is relevant to you or not, because some things are more appropriate for startups because you're just beginning, and other stuff is a little more intense because you've already got some numbers to your name and you've got some background to what you're doing. So please check for that when you're signing up for these sessions as well. Really appreciate everyone being here today. And thank you so much, Yos, for being here. Her information is on this final slide. I'm going to leave it posted for a minute longer and stop the recording, and everyone's welcome to head to lunch.